I think you're sharp enough to turn it. You're going to be all right, but be careful. That puts this hour of the Ramsey Show in the books. We'll be back with you before you know it. In the meantime, remember, there's ultimately only one way to financial peace, and that's to walk daily with the Prince of Peace, Christ Jesus.
Hey, it's Rachel Cruz, co-host on The Ramsey Show. If you want to do your debt-free scream live on the show, visit RamseySolutions.com/debt-free scream. We'd love for you to come to Nashville and tell Dave your story. That's RamseySolutions.com/debt-free scream.
Ramsey Show over. After show beginning. Just put my links in the chat, then we'll get going here. Get that ready, get that ready. I think I got everything today. Thought that before and was incorrect. Alrighty, so we are going episode number 237 today, and as per usual, also it's time to sing. Listen for the drum taps. Like all plans, it starts with step one. $1,000 emergency fund. Step two, you'll pay off all your debt. Step mortgage, we don't do that yet. So pay off your consumer debt. Every one of the charges, from smallest to largest. Baby, step three is next. Full emergency fund of expenses. You stay gazelle intensive. His name is Dave Ramsey, and this is his plan. And I hope to meet him. I admire the man. I've messed up in my life, but these steps have made it right. That's why I coach, that's why I coach, and why I host this after show. If you don't like results you're getting now, you should do the baby steps. And if you want to have financial peace, you should do Dave's baby steps. Now listen, step 4 is when you can take a breath and go let's guzzle and invest. Step 5 is to save for your kids. No student loans at all for college. The 6 is to pay off your home. Step 7, build your wealth and don't keep it all yourself. And you've lived like nobody else. And now you get to live large, and now you get to give large. His name is Dave Ramsey, and this is his plan. And I hope to meet him. I admire the man. I've messed up in my life, but these steps have made it right. That's why I coach, that's why I coach, and why I host this YouTube show. If you don't like results you're getting now, you should do the baby steps. And if you want to have financial peace, you should do Dave's baby steps. Trumpet, take it home. Live from Columbus, OH. It's the Ramsey Show Aftershow show. Here we talk about the Ramsey Show YouTube chat, and the people in it, and all things financial, and whatever else I want to talk about. I'm your host, Coach Steve Money. I'm a certified Ramsey Solutions financial coach. You can schedule a free consultation assessment at calendly.com/Coach Steve Money. The link is at the top of the chat, also in the video description below. You can email me about anything, yes, anything, CoachSteveMoney@gmail.com. You can reach me on Instagram, add me on the Grom, Coach Steve Money, no spaces on there. And if you'd like to donate to the channel so I can make it better, that's paypal.me/Coach Steve Money. Thanks for the IO, Judy Pine. Appreciate it muchly. Today's Ramsey Show hosts on an all-new show in the year of our Lord 2022. We're Dave Ramsey, author of this book right here, The Total Money Makeover. It can change your life, changed mine. And his new book, Baby Steps Millionaires, and that came out, when did that come out? A month ago? Something like that? Month and a half? I don't remember. Something like that. It has not been out that long. All right. Reminder, John Deloney's book is available for pre-order. $20. Comes with $300 of extras, including BetterHelp.com counseling as well. Alrighty, so in addition to Dave hosting, we had George Camel, host of The Fine Print. And of course we have, whoops, I had everything set. And oh gosh, I hit the X instead of the tab. I hit the X on the tab. Not very good. All right, so I think it's in the right place, and it should start as soon as I press the button. Yeah, no, it didn't. Okay. Yeah. JoJo's 3 podcast. They don't cost a cent. Borrow future entree leadership and the fine print. Opened up YouTube, saw the thumbnail was camel. It's always fun with George on the panel. Ayo wears Razer Deloney, you still wear flannel. No one does it better than our guy George Camel. Paid his house off. Baby step 7, y'all. You bought a second dog. Can you imagine that? Alright. That's enough of that. Market report. A little delightful beverage here, Diet Coke today. So, I did win fantasy mutual funds yesterday, and I will almost certainly win it mañana, with the NASDAQ being the most up, 3.77%. The Russell Small Cap Index just behind that. S&P 500, not too shabby, 2.24% up and 1.55% up. Alrighty. And we will talk about that. Oh, let's use the NASDAQ as basis for what I'm talking about. I'm going to talk about right now. So, the dotted line across the bottom, not the one that is vertical, but the horizontal line at the bottom. That's your previous close on this 12948.62. Okay. So after the after hours trading last night and the before hours trading this morning, it opens this much higher. So it keeps going a little bit more, and then as it gets closer to the Fed announcement and press conference, you can see it does that, and then it kind of goes up a little bit more, and then apparently they said they are gonna raise interest rates as planned. So I don't know by how much. They were planning 0.25%. I don't know. We'll see. I didn't see any stories about that, but it goes like that, and the press conference starts. So the information came out right there at 2:00, and then at 2:30 the press conference starts, and so a little bit after that it hits the bottom right there, and then it just goes straight up for the rest of the session until 4 p.m. Eastern Time. And as you may know, generally all these indexes basically look about the same. And if you like look at one for 5 years, any of these indexes, you'll see right when the pandy crash happened on all of them. So they generally follow basically the same pattern. And some just don't go up as much as others, etc., etc. But that's interesting. Oh, okay. Let's see what it says. Dow books 500 point gain after Fed raises interest rates for first time in 4 years. Signals more to come, which we knew that as well. And I can't read that to see if they said how much did the Fed say raise today. All right. Wall Street Journal will let me read it, certainly, won't they? Boom, ba-dum, bum, bum. Why don't they just say they raised it by this much? Let's see. Is it right there? And of course, okay. All right. Just trying to get a little information for the kids. And, let's see. How maybe it'll be right here. 0.25% higher. Okay, so exactly what they said they were going to do. Okay. And so, I don't know what people thought that they might lower them more. I don't know. I mean, raise the interest rates more. I don't know what in the world happened there, but then like all of a sudden gangbusters. So I mean, and the previous days, not yesterday was up as well, but Monday and I guess just Monday, Friday too, I think it was down. And part of the reason was supposedly, and we never know the reason why Wall Street does what it does, but supposedly the reason was being worried about this meeting. And so, but they did exactly what they said they were going to do, and I guess that's fine after they say it, but before it's not. So, who knows? I'll give up one day trying to figure it out. What else do we have? Oh, we want to go to main page and see. We have tomorrow morning is Accenture. Tomorrow afternoon is FedEx. And then next week is Nike, Adobe, NIOE, and Micron Technology. And those will be report. Actually, the 29th is probably going to be the week after. Oh, March 29th, yeah. So, the most followed stocks on Google. Single stocks, not recommended for retirement. Managed mutual funds only, but guess what's in your managed mutual funds? These single stocks. Let's see, what do we got? The most up, the artist formerly known as Facebook. Look at that. Meta Platforms, over 6% up in just one day. 4.78 Tesla, which is no stranger to being over 3%, either up or down. Amazon, maybe still riding high from the stock split last week. Microsoft 2.52, Google owner Alphabet 3.16, Apple 2.9%. So good day, and like I said, I'll be almost certainly will be winning the what? I want to find out what that is. Certainly will be winning the fantasy mutual funds. All right. So let's see what rest of the planet did today. That would be all up in Europe, all up in Asia. Currencies, euro up on the dollar, dollar up on the Japanese yen, the British pound, love, up on the US dollar. The Canadian dollar, up on the US dollar. Sorry. And the Australian dollar, mate, up on the US dollar. What about crypto? Crypto is indeed all up. Alrighty. So let's see what that was that I just clicked on. From TheVerge.com, examining AMC's embarrassingly stupid investment in a literal gold mine. Let's see. Oh, AMC Theaters. I thought it was AMC Cable Channel. All right. What did they get? They threw both its analysts and meme stock shareholders for a loop this week after the company announced it was acquiring a 22% stake in a mining company, not a crypto mining company, but a company that mines actual silver and gold. Baffling investment for a movie theater chain. Enough so that one analyst we spoke to called it a complete misuse of shareholder capital. Right, you would think it would be to make their movie theater better, but all right. What do they do? Our strategic investment being announced today is a result of our having identified a company in an unrelated industry that appears to be just like AMC of a year ago. It too has rock solid assets, but for a variety of reasons it has been facing a severe and immediate liquidity issue. Its share price has been knocked low as a result, and are confident that our involvement can greatly help it to surmount its challenges to its benefit and to ours. So AMC is day trading. Cool. Yeah, right. We did that. 0.25% is the amount that it is raised there. Let's see this from Market Watch, where we can see, I can read the whole article if I need to. Let's see. Jonathan Burton's life savings. I don't know. That's just the title, I guess, of his section. Prepare for a recession this summer, a bear market in real estate, and a drop in stock prices, warns strategist David Rosenberg. Okay. Inflation has turned out to be not so transitory. Transitory means temporary. And the Fed, that's what I think they said at first. They said, it's just transitory. And the Federal Reserve has its Knives Out. Knives Out, excellent movie. They are going to do a bunch more of those. Like, I think they had plans for 3 more of those with, what's his name? The James Bond. Yeah, the guy that just did his last James Bond movie. I don't recall it, but anyway, he's really good in that. Let's see. Raising interest rates. U.S. Central Bank primary tool to restrain runaway prices is a blunt instrument, and at best until now, Fed Chairman Jerome Powell has been reluctant to reach for it, let alone use it. All right, and so it's supposed to supposed to chill inflation out. And we'll see if that does happen. So, and if it does that, if the rate's higher, if it could make stocks go down. Just have to see. Resulting recession is negative for home prices. Consumer discretionary stocks and nice to have goods and services, and positive for treasury bonds and the producers and purveyors of consumer staples, healthcare and medicine, energy, food, and other things people need to have. Well, we'll just have to see what happens. That's why you have your emergency fund. And if things cost more, you just have to make more to buy them, or you do that in your budget. You take care of that budget and decide what you actually need. And if you have things in your budget that you say you need, but you don't actually need, then you may need to cut those out if you have an income issue as far as buying what is it? Did they say it was luxury? Nice to have goods and services. Right. Other than the rest of the stuff, which is necessary. Right. Federal Reserve alert, how to trade NASDAQ S&P after the rate hike. So let's see what this says about it. Federal Reserve will raise rates. Do you know how to trade the S&P 500 and NASDAQ afterwards? Here are the key levels to know now. Of course, worries of a recession due to spiking inflation and a war in Eastern Europe aren't helping sentiment. So far, stocks are rallying ahead of the event, as they were this morning, and then it went down, and then it went way up again. Despite investors' gut feeling, stocks can and do rally in a rising rate environment. At least historically, that's the case. Concern now is that the market is using up all of its buying power. Is it just a short covering rally ahead of the Fed, ahead of the event? Look at the key levels. Right there is a graphic for AJ and Troy Story. They like graphics. Whoever wrote this article has been adamant that we may see a decline in the days and weeks leading up to the Fed event and a rally after. We'll see if that pans out despite an early start to the rally this week. The S&P 500 has been holding up better than the NASDAQ, as you'll see below. However, both have been under plenty of pressure. And in fact, but after the NASDAQ beat the S&P for 4 years in a row, this past year the S&P finally beat the NASDAQ again. So don't know if that will be a trend or what, but I think people like their tech stuff, so we'll see. See how that works. Let's see how the market trades for the rest of this week will be telling whether we get a sustainable rebound or simply sell the news event and continuation lower, or if it does something else, whatever it wants to do and can't be predicted. That's the third one that they left out. They never put that one on there, though. Let's see. S&P 500 is struggling with the 61.8% retracement of the current range, although it's trying to push it above it and the 21-day moving average. Yeah, that's what all that stuff means. I don't know anything about how to read these things. And so, like, supposedly, if one of the lines or something goes to a certain level, that means you buy it. That means you buy it if it does whatever. There's something where if it makes a cross pattern, two lines make a cross pattern, then that means something else. That means bad news, I think. That's what I read earlier today. So, but I don't know that stuff. Yeah, so that tells you how to do that, but it doesn't really tell you how to do that. It says how the market trades this week will be telling in whether we get a sustainable rebound or simply a sell the news event and continuation lower. That does not say how to trade the S&P 500. That reminds me of my ex-wife. Grandma had a recipe. And the recipe, one of the instruction lines in it was, when I make the sauce, then I'll know how much whatever to put in it. So that, that's, it didn't say, do a pinch, do, half a cup, whatever. It didn't give a measurement. It says when I do this, then I'll know how much to put in there. So yeah, not so helpful. So but that's like what this is, because it's not really telling you what to do. And of course, before I read the NASDAQ one, it's what we do with our mutual funds. Though we do just like we do always, which is you buy on schedule, no matter what it's doing. So unlike the instructions for normal people or traders. So let's see. There was a day trader that called in that had done very, very well today. Let's see. Dave did point out he was lucky, and lucky doesn't necessarily sustain, but that's all he said about it. He didn't push it on that. Okay, so same thing. We got 21-day moving average, 61.8% retracement. They just said the same thing basically for the NASDAQ one. On the downside, a gap filled at 329 is possible without ruining the rally. However, if shares do, see again, it doesn't say do this. It just says all this stuff, and basically gobbledygook is what it is. If this happens, then this, and this, and this is in play here, and then yeah. All right, and so that's it. Okay, did you like that explanation of it? Yeah, but I don't know how to read every one of these. I mean, I know it has the legend right there if you care about it, but there's our nice graphics for Troy Story and AJ who like those. So if you guys are watching, what up? Let's see, this from another thing from the Verge.com. Microsoft updates Outlook, Teams, and PowerPoint to be hybrid work ready. Teams is getting more remote friendly, so that makes sense to do. Microsoft was one of the first companies to warn other businesses that the pandy would forever change work habits. You're probably right about that. So, and they just updated those things with more remote features, probably. New front row layout is launching in Teams today, which moves the video gallery to the bottom of the screen so people physically in meeting rooms can see remote colleagues face to face. All right, like that. Fun new calendar and new templates. That's fun. Alrighty. We talked about Apple. So previously of Apple, I think he still has a bunch of stock. I think. Steve Wozniak's best investing tips and why he's very skeptical of most cryptocurrencies. So I just thought this would be interesting to compare his investing tips to Dave's. Let's see. For Apple co-founder Steve Wozniak, investing can be a real headache. As a rule, I don't invest often because then you've got to be watching it every day. You don't have to be. I mean, I do kind of, and I tell you guys about it every day. And maybe I shouldn't do that. Maybe I should find other content to do. Perhaps I'll do that and stop tracking it every single day. I like my head to be really peaceful and low stress. Sure. That's why he says he tries to avoid buying stocks or other volatile assets because, as he told Fortune in 2018, a daily obsession with their worth could corrupt your values. You mean like if you play fantasy mutual funds with your actual mutual funds, maybe? No, I think my friends and I that play that, I think we're all right. I don't think we're obsessed with it. Still, he'll put money behind a venture he believes in. Wozniak is currently an investor on the online reality show Unicorn Hunters. Alrighty then. The show sees Wozniak and other stars, including former U.S. Treasurer Rosie Rios and singer Lance Bass, among others, field investment pitches from tech startup founders. Oh, okay. I thought they were actually like in the forest and stuff looking for unicorns. That is weird. Okay, so this basically it's tech startup. Basically, it's just like, what's the name of that program? That Mark Cuban is on, and Shark Tank, or I think he was on it. I don't know if he still is. Wozniak's goal isn't to make a ton of money, rather it's to support companies and ideas that personally interest him. Well, on that, I mean, that basically gives him a job to do. So if he's on the show, like and he gets paid for it. So that's kind of, some of that is going into the show and then coming right back to him as being paid for it. So let's see. The mindset isn't new. It's one reason why Wozniak is now reportedly a millionaire as opposed to a billionaire like the late Steve Jobs was before his death in 2011. But Wozniak wouldn't have it any other way. Here's how he weighs a company or asset before he decides to do one of his least favorite things, invest. All right, and again, he's investing in single stocks, which, of course, Dave Ramsey doesn't recommend. Recommends mutual funds for the automatic diversification that you get. For ages and age, I get pitched a dozen times a day to join other companies and startups that say, we're going to be the next Apple, we're going to be the next Steve Jobs, whatever. I just get so tired of telling them all I am backlog and don't really have the time. There you go. Startup has to tickle one of his personal interests to play into his computer engineering experience at a minimum if its founders want to reel him in as a backer. Wozniak said his decades of experience take over when he judges whether a company has a chance to succeed. I'm just looking at, does this technology mathematically, scientifically, and engineering-wise have a chance of actually being developed at a reasonable cost? Reasonable cost, very important. And then after that, even after it's made at a reasonable cost, can it bring in a reasonable profit? So it says skepticism is valuable. Boom, boom, boom. He's talking about like new technology things that people want him to be invested in. I always believe you should do everything that you can afford and don't do everything on credit. And of course, don't do anything on credit would be Dave Ramsey's advice. So I look for that in a company. Are they going to be successful? Their money that's coming in, is it real? Is it going to be scalable and continue through time? Right. He said, crypto is risky unless it's not. He's very skeptical of most crypto, and that investing in crypto is often too risky for the average person, especially if they're biting off more than they could chew. He says he sees an awful lot of opportunity for scammers using crypto hype, absolutely, and the digital currency's complicated and volatile nature to take advantage of uninformed investors. Yep. I only look for crypto that are based upon kind of like a stock in a company, something you could visualize and see, and they've been successful already. Like what? In that vein, he's currently involved with 2 cryptocurrency projects. One is from Force, a blockchain project that funds energy-efficient companies, which Wozniak helped launch in 2020. Force offers a crypto token called WozX that is named after him, I'm assuming, that allows investors to earn a portion of the profits that come from these company energy savings. Okay. And that's, yeah, I mean, that's another thing about crypto. It's not just like a currency. It's not like a dollar. It's like some of them are just the crypto itself. Some of them are tied into actual businesses and what they do. And so that's why, it's like, how do you choose? I guess he chose because he's into that, and they said we'll name a crypto after you. Let's see, based on real results, real return on investment. On the minus side, having problems getting it implemented. And there you go. Cryptocurrency's price has dropped more than 90% over the past year, according to Coinbase. So, there you go. He also has a cryptocurrency called Unicorn, recently created for unicorn hunters. Yep. So, there you go. He's played with many other cryptocurrencies. At least skeptical about Bitcoin and Ethereum's Ether. He says Bitcoin is just gold. I mean, nobody owns it. It's mathematics. Still, he says he quickly sold most of those crypto holdings. I just kept one Bitcoin because I'm scared. I don't want to be tracking it up and down like stocks every day. That's just not my life. I have a lot of desire for things that are stable and predictable. Alrighty. Let's see what's trending. NCAA coach left a $800K salary to coach basketball. Now has his team headed to March Madness. Okay, must have been a pro somewhere getting that money. I don't know, NBA or perhaps a Europe League or something. Why the first black woman CEO in the Fortune 500 says you don't have to go to all your kids' games. Interesting. And that's probably controversial. Goldman Sachs, and make people click it. Goldman Sachs wants workers back in the office 5 days a week. A stampede of companies could follow. Yeah. Here's what a Harvard-trained sports medicine doctor does when she doesn't feel like exercising. And avoid these 5 types of words and phrases that make you sound immature, says speech expert. I'm going to go ahead and say one of them is that's what she said. Probably. Let's see. A couple more here, and then we might not even have time to do Reddit today. Let's see. This is from CNBC. Home builder sales expectations drop dramatically as mortgage rates soar. Let's see. Key points. Builder sentiment in the market for single-family homes dropped 2 points to 79 in March on the National Association of Home Builders Wells Fargo Housing Market Index. While current sales conditions fell 3 points to 86, sales expectations in the next 6 months declined a steep 10 points to 70. So they think the buying frenzy will chill a little bit. The index doesn't often see such large monthly moves. Builders have long cited building material supply side constraints and rising construction costs as headwinds, but now the expectations of higher interest rates are hitting them harder than that even. All right. This just rephrases those numbers. Average rate on the 30-year fixed rate mortgage is already a full percentage point higher than it was a year ago. Continues to rise. People still buying apparently. So once that, I mean, that to go lower, that has to dip significantly to get prices to start lowering. While low existing inventory and favorable demographics are supporting demand, the impact of elevated inflation and expected higher interest rates suggest caution for the second half of 2022. Regionally, on 3-month moving averages, sentiment in the Northeast fell 7 points, Midwest dropped just 1 point, and South 3 points, and the West was the only region to see a gain, up 1 point to 90. People moving to the West, maybe, except for California, maybe, I don't know, or maybe people going in there and filling up the people that left. People with money, obviously. All right, this from CNN Business. And Biden demands faster drop in gas prices as oil tumbles. And okay, that ought to do it. Thank you, Mr. President. Sure, it doesn't work like that. He's using his bully pulpit to call out the tendency for gas prices to go up like a rocket when oil spikes, but to only drop like a feather when crude crashes. Sure. So it would make sense if it can go up that much. When it goes up, it should go down relatively. That would be logical. He fired off a tweet. That'll get him. Painfully slow decline in gas prices in a bid to draw scrutiny to decades-long trend that critics say hurts consumers by failing to pass savings along to the drivers. Right. Oil prices decreasing, gas prices should too, he said. I mean, he right, but you know, that becoming to reality. You think anybody heard about in the oil industry, heard about this tweet and said, oh, we better drop prices? Or specifically the gasoline industry. You think they said we better drop prices because the president said something? They're probably going like this. Ooh, scary fingers. All right, and finally we have something I talked about or I didn't talk about it. I just posted it in the Ramsey Show chat. Excuse me, earlier before the show started. This is from Variety.com. Variety, a well-known industry magazine for a long time. Netflix will prompt subscribers to pay for users outside their households. Excuse me. In new test to address unauthorized password sharing. And the thing here is, according to Netflix terms of service, a customer account may not be shared with individuals beyond your household. After years of turning a blind eye to password sharing behavior that falls outside that requirement, the company last year ran a limited test prompting users to enter their account credentials as a way to nudge freeloaders into paying for their own accounts. Now, in an upcoming test launching, here's the thing, in 3 countries, Chile, Costa Rica, and Peru, Netflix will let members who share their accounts with people outside their household do so easily and securely while also paying a bit more, according to the director of product innovation at the Netflix. The new options will roll out in the next few weeks in the 3 countries and may or may not expand beyond those markets. They're gonna see how it goes, I guess. So let's see, with the add an extra member feature, members with Netflix Standard and Premium will be able to add subsidiary accounts for up to 2 people they don't live with, each with their own profile, personalized recommendations, login, and password for less than the cost of a separate Netflix plan. How much? Oh, the cost for adding a submember is $2,380 CLP, whatever that is. Oh, I think that was what the guy in the Ramsey Show chat today. He was saying he was in Honduras and he was saying all his money was in LP. And he was asking about buying a house. $299 US dollars in Costa Rica. So, yeah, $299 is a significant savings. So, yeah, so the basic plan is $899. Yeah, and standard $12.99. So, and then you add an extra member and you get that, and so that is significantly less than their own membership. Whether that's gonna make people pay or not, I don't know. I don't think they can enforce that unless they start making it bound to customer IP address or something like that. Let's see, what time is it? 49. Oh, let's do one Reddit question. once again. This is not run by Ramsey Solutions. This is fans that moderate this. But they seem to be nice people as far as I can tell. So life after the emergency fund. This from accomplished ad 8389. So I finally saved $10,000 from my emergency fund for myself and 2 kids. I have about $14K invested as well in zero debt other than my house. My interest on the house is very low, around 2.75. Should I save a little each month, invest, or pay off my house? Or maybe all 3 in smaller amounts? Thank you in advance. Well, you know what you could do if you follow the baby steps from step 1, $1,000 emergency fund. Step 2, pay off all debt except for mortgage. And step 3, save your $10,000 for your emergency fund. You know what you could do? You could do step 4, which is invest 15% of your gross income, 15% only of your gross income in retirement. And you do 4, 5, and 6, and different than the first 3. 4, 5, and 6 are done all at the same time, still in order, but all at the same time. For your 2 kids, you begin college savings for them, and then you figure out what you need to have the money that you want to have by the time they are 18. You figure that out. You get the number you want at that time, and then you back it down to see how much you have to save each month. And then the rest, everything that is left over after you've done the 15% of investing and all your expenses and saving for kid college, after you've done all that, then anything that's extra, then that goes on the house. So keeping your mortgage around, as Dave says, like it's a pet, so that you can invest in the market, which you hope will be making more than 2.75. Some days it's not. Some days it's down. But your debt is guaranteed. The market is not. So that's the way to think about that. Also, if you do keep that around as a pet, and pay your 2.75% interest in the hopes of making more in the market, that is what we call debt leverage, where you're using the house debt to invest in the market. Of course, Dave always turns that around on you, and he says, if you had that house fully paid off, would you take a mortgage on it so you could invest that money? And that's the exact same thing. If you are investing the money instead of paying it off, it's the exact same as if you have it all paid off and then you borrowed money on it. So, but that makes you think about it more. So, I'm just scared about it. People are going into the math about it, which they don't need to do. There we go. 4, 5, 6. Interesting. Baby steps. Yeah. So yeah, people always think they are special, and they think they're figuring out something, and etc. etc. Are you following Dave's plan? Yep. I like the concepts, but not strictly. Okay. Well, do what you want then. You're doing accomplished ads plan then. So you're asking about, you're on the Dave Ramsey subreddit, and you're asking about life after emergency fund, which is one of the baby steps. You're asking what to do after that. Well, can't be surprised. Although I'm sure he might have got other answers on there. I just blew through them. Let's see. Let's do one more. Really? You guys see that? This from Rome77. Let's go. Sell car to pay off debt and lease a car. Currently $40K in debt. After taxes, I make $56K a year. Wife is stay-at-home mom. Our car is worth $20,000. We have a 2-year-old child. Another one on the way. At our current income, it will take years to pay off the debt. What is your guys' thought? Get your income up. Work more. Work more. Get on a budget. Cut expenses. Even with 2 kids. You don't, you're just trading debt if you lease a car, because then you still have the car payment. If you don't have, if that car that's worth $20,000, if you don't have a payment on that, that's the best situation you can be, and way better than having a lease payment. Sorry about that. You guys hearing that? It's going. All right, so yeah, that's not very smart at all. Who was it? Car and Driver Magazine, or was it Popular Mechanics? One of those magazines investigated it and came up with that leasing an automobile is the most expensive way to get a car. Alrighty, what are we doing? Upcoming streams. Let's see. Tonight, 8 p.m. So about an hour. I'll be playing a single player game. 8 p.m. Eastern Time. Wednesdays and Saturdays. Old man video gaming. I do bonus ones all the time though. Whenever I have time. Whenever I feel like playing. I just stream it usually. Every once in a while I'll play something and not stream it. Wednesdays, no set time. Curse of Oak Island recap. That did go up this morning. So, of the new episode. So, that did go up this morning about 6 o'clock, 6 a.m. As predicted. Mondays, 8 p.m. Eastern Time. Tech support with Coach Steve Money. I do the same thing I just did on the Dave Ramsey subreddit. But I go to the tech support subreddit and answer questions based on my 25 plus years of being a PC repair tech. And of course this show, Monday through Friday, 6 p.m. Eastern Time, even when the Ramsey show is a repeat, which we haven't had many of those in a long time. We haven't had, I think we've had one since the Christmas break, maybe 2. The Ramsey show, Aftershow show, yes. Righty. And eventually Bella will say, let's play a game, Dad, and stream it. And so, and we gotta pick a new one and start that one. All right, let's see if we got a new subscriber. We did not. That's okay. Schedule a free financial coaching consultation / assessment with me at calendly.com/Coach Steve Money. The link is right here on my YouTube banner. It's also in the top of the chat and in the video description below. Email me, CoachSteveMoney@gmail.com. And I especially want to hear from you if you want to sing the Baby Step song. I would love that. I have not heard anybody sing it but me. I would love to hear somebody else sing it. I'm sure there are a lot of better singers than me in the world. I know that for a fact, and I'd love to hear somebody sing it. PayPal.me/Coach Steve Money, which is right down there at the bottom of the webcam frame. And that's how you can show your appreciation. Also by subscribing, of course, and liking and commenting. That would be great. You can get me on Instagram, Coach Steve Money. No spaces. Alrighty. Thanks so much for watching, as always. And make smart financial decisions every